Hey guys, today we're diving into an important topic that often gets overlooked. What happens if you don't make an insurance nomination in Singapore? Whether you have a life insurance policy or any other type of insurance, understanding the consequences of not making a nomination is crucial. In Singapore, making an insurance nomination ensures that your insurance proceeds go directly to the people you want to benefit from them. Without a nomination, things can get a bit complicated. First, let's understand what an insurance nomination is. When you make a nomination, you're essentially instructing the insurance company on who should receive the payout from your policy in the event of your death. This can be done through a trust nomination or a revocable nomination. Now, I want to sidetrack a bit and discuss the trust nomination. And I want you to listen to this very, very carefully because I've seen many people make trust nominations without understanding the consequences and then later regret it. Under Section 132 of the Insurance Act, a policyholder can make a trust nomination at the time of buying a policy or at any time after the policy is issued. Only a spouse or child can be nominated for a trust nomination. When the nomination is completed, the policyholder will lose all rights to the ownership of the policy, and all proceeds from the policy, including living benefits and death benefits, will belong to the named nominees. But the policyholder will be responsible for paying the insurance premiums, and the trust nomination is irrevocable, and this means you cannot cancel it unless you have the beneficiary's consent. Once a trust nomination is made, the policy no longer belongs to the policyholder. As such, he cannot give it away under his will, as he can only give away property under the will which belongs to him. Therefore, a common scenario I see is clients coming to me to make a will because they are no longer on good terms or on talking terms with their spouse or children, only to realize to their horror that they made a trust nomination which is irrevocable, and that when they die, the insurance payouts will go to the spouse or child that they no longer have contact with. If the nominee is also dead, the insurance payouts passes to the estate of the deceased nominees and will be distributed in accordance with whether the deceased spouse or child died with or without a will. Now let's move back to insurance nominations in general. What happens if you don't make any nomination? If you die without making a nomination, your insurance proceeds will be distributed according to the Interstate Succession Act. This means that your assets, including your insurance payout, will be divided among your next of kin based on a predefined formula. For instance, if you're married with children, your spouse will receive half of the proceeds and the remaining half will be divided equally among your children. If you don't have any children, your spouse gets half and your parents get the other half. The Act has a specific order of priority that it follows, which might not align with your personal wishes. Without a nomination, the process of distributing your insurance proceeds can be time-consuming and may require your family to go through legal channels. This can cause delays and additional stress during an already difficult time. The lack of a clear nomination may also lead to conflicts among family members. Disagreements over who should receive the proceeds can arise, leading to disputes and strained relationships. Another significant point is that without a nomination, the insurance proceeds may be used to pay off your outstanding debts as they become part of your estate. With a proper nomination, these proceeds typically go directly to the nominees and are protected from your creditors. If you have an insurance policy, it's highly advisable to make a nomination. This ensures that your loved ones receive the benefits directly and without unnecessary delay or disputes. Here are some tips for making an insurance nomination. Number 1, review your policy. Check if your insurance policy allows for a nomination. Number 2, choose your nominees carefully. Think about who you want to benefit from the policy. Number 3, understand the types of nominations. Decide between a trust nomination or a revocable nomination based on your needs. Number 4, keep it updated. Life changes such as a marriage, divorce, or the birth of a child should prompt you to review and update your nomination. Making an insurance nomination is a simple step that can save your loved ones a lot of trouble in the future. That's all for today's video. If you found the information useful, please like, share, and subscribe for more legal insights. Until next time, stay informed and stay prepared.